Hi, welcome to another edition of Market Analysis for today, March the 27th. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. Well, we have another week, another volatile day. You know, Markets are comprised of various constituencies of market participants. All futures and commodity markets can be driven directionally only by its biggest players. What we are seeing now in the stock indices is a battle between the big money players over the macro questions surrounding Fed policy. My experience as a trader has led me to the conclusion that it is pointless for me to try to guess how the macro situation will play out. It is also totally unnecessary for me to know in order to find opportunity in the time frames I trade. It can be incredibly comforting to view the markets through the lens of auction market principles. They work and are working now. The difficult part of this for a lot of people is the danger of the incredible noise generated by this or that narrative. We trade price action. We make or lose money based on price action. Price action determines the important level in all time frames. It is timelessly consistent and objective. Something will get soon regarding the huge divergence between the Russell 2000 and the Nasdaq. Healthy stock market trends do not display this type of extreme disparity between the indices. The key will be the price levels of each. Now, with that being said, we already understand that over the last month, four banks have collapsed. Silicon Valley, Silvergate, Signature, and Credit Suisse. And on Friday, Deutsche Bank sparked a new round of banking fears also. Now, odds are commercial real estate is the next shoe to drop for the banking sector after this month unrest. So there is a potential credit crunch, which is sparked by a wave of refinancing on commercial real estate loans. This could send stocks spiraling and tip the economy into a recession. There is also nearly 450 billion in commercial real estate loans which are set to mature in 2023, 60% of which are held by banks. Now, these firms hold almost 70% of all commercial property debt outstanding, a much higher portion than larger banks. So, out of that batch, almost a quarter will default, which could imply roughly 38 billion in losses for banks. So that could obviously set the pace for the market to break down, to actually fall. With that being said, let's take a look at what we could probably see in the markets today. Now, look, regarding the Nasdaq, there is no objective potential resistance in the Nasdaq above last week's high until the high of last August. So we are looking that the market did open with a gap up, okay, on on the Nasdaq, which has been already closed. So we can expect that a rally could be in potential, set up. So we can expect that. Now, will the market continue to fall? Well, this market was spiraled down if the banks will come out now the defaulting of the commercial properties. So that could obviously spark that sell-off. But for today, for right now, for nearly short, very short term, we can expect a continuation of the rally. The RSI is below the overbought territory, so that could play out well. As far as the S&P goes, well, look, the S&P has opened with a much wider gap up, which has not been closed yet. So, can the market at the open, will the market come down and close it, or will they just rally up? I have a very tight resistance level here on the S&P. That could be set out. 4100 is that one psychological support level, but once broken, no, we could probably reach the other one. So we have our support at right around 3909, 3900, and then the second one at 3813. Then we have the Dow. Dow also opened up with a gap up, and we're seeing that the market is kind of pushing higher. So, when the RSI trades above 50, that could be that signal, that confirmation for us to come in and take some positions into the market. But obviously, we're gonna have to measure if the market is already trading around that resistance level or your resistance level that you have. As far as crude oil goes, crude oil we expect that the market did find a floor right around $65 for crude oil, and from there it has been trading higher. The market has opened up with a gap up where it closed it today. The moving average, the 90 moving average, is below the market, so that could also help it as a support level. So 71, 75 can be our resistance level or our target for today. Okay, so keep that in mind. I'll be long in crude oil. I'll be shorting the Nat Gas. I'm looking at very tight range. $2 is support for Nat Gas. It'll probably bring it into the nearly the oversold territory. As far as gold goes, gold did open with a much bigger gap down, so will we find support around 1935? Okay, that's way to be seen. Or will the market rally and just close that gap? So right now I'm looking at gold to be bullish on gold to come back to that 2000 level around this. Okay, so I'll be buying gold. Then silver also with a gap down, which this one has been closed already, but it continues to trade lower. So 2250 will be probably that support level, and it's coming and buy it again. Then copper also traded, no, opened with a gap down. It has been closed. So also $4 is the support level where I'm looking for copper to continue to, if it continues to trade lower, where I'll come in and buy it. Then we have Bitcoin. Bitcoin is in a tight range, trading around 28,000. Just waiting for something to break in the financial sector, so you can come in the banks really, so you can come in and take a benefit from that, and that would be obviously the commercial residential, the commercial property real estate. Then we have the euro, which is trading higher, 108. That'll be reached. 108, it'll be reached. As far as the pound goes, the pound is looking, it opened up with a gap up. With it close and close it completely, is holding that 122.50 pretty well. So around this area, we could probably come in and buy it. It is above 50, the 50 marker, so the impulse is higher, is bullish. We do expect the dollar index to trade lower, so I'll be shorting the dollar index. All right. Well, that's it for me today. Have a fantastic trading day, and I'll see you tomorrow.